my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of Chicago wheat and corn. I'll start with Chicago wheat. Since the late March low, we've seen the market gradually gap its way higher, though to be honest it has not been as inspiring as the gap suggests, with far calmer market ranges than compared to the moves of late February and early March. Admittedly, we have had a daily key reversal up 2 Fridays ago, as the market pushed up over the 50% Fibonacci line for 2022 at 1051, with the resultant move higher last week as a follow-on. However, early this week, with still some bullish incentive left over from this daily key reversal up, the market ran into a congestion band between 1104 and 1140. with the main resistance being at 1140, and Tuesday saw a bearish engulfing pattern form that has changed the incentive to a bearish one for all this week. 3 key points I'd like to discuss here. Firstly, the market has slowed, breached if you like, but seemingly still supported by the lower time currently at 1068 of the early February to late March bullish shift pitchfork. Indeed, this lower tine is acting more like an uptrend than anything else. But for such a size of pattern to only act thus suggests that it may not be as strong as it seems. Now we shall see. Secondly, we are very, very close to making a possible outside week, and even perhaps a weekly key reversal down. If prices can drop down under 1061, which they've just about managed to do that, and possibly fill that gap left there between 1060 and 1062, which they haven't quite done there yet, and then close under 1058, which is a lot to ask, well, we'd have ourselves a weekly key reversal down. However, I know that is a lot to ask in only the next few hours, so we may have to settle for an outside week. Finally, there is yesterday's action. Superficially, one could call it a bearish opening black Maribosa. However, given where it is placed and its shape, there is an argument for it to be called a possible bearish belt hold pattern. If that is the case, then we have one of the most accurate patterns available, hence I would very much like to see what tonight and the next few days may bring. So, looking below, after the 50% Fibonacci line at 1051, we next have support around the April 2008 high at 998 up to 1003. Below that there is a band 967 to 978 which held up the market in late March, mainly I suspect to the June 2008 high at 972 being responsible. Looking above though, beyond the high of this week, the next resistance is the very recent 50% Fibonacci line at 1166. Chicago corn. First off, please kindly ignore the color change in my labeling. This is something that my charting system occasionally does without my permission. There's no special quality attributed to different colors. Okay, so the latest move higher in this market can be attributed to one key action to start with, which led to many others. The key action was the almost weekly key reversal up that happened 3 weeks ago, but which ended up being the lesser outside week pattern instead. That week was also a spike bottom, which along with the earlier pipe bottom 2 weeks prior, formed a double bottom together that caused prices to rise. One additional feature was how the old broken upper bull channel line, currently 726, worked on both those periods to push prices higher as well. What has interested me overall was how the rise has seemingly stalled at the overhead congestion area 815 to 818. This is a seemingly good resistance band, but it has one additional key ingredient running through it this week. And that's been the middle time, currently at 816, of the big old April 2020 to September 2021 bullish Andrews pitchfork. This pitchfork has some form, as the lower time, currently at 654, helped hold the market higher back in October last year, through to January this year. Hence, keep a close eye on that middle time, as it may be resistance, but it is a rolling higher resistance. Thus we are seeing a small pullback right now, and it may look like the market has turned back down, but I say watch out for that broken upper bull channel line below that I've mentioned. That has worked so well recently, as well as the lower time, and should prices turn back up in a week or two, well, do not be surprised if the overhead resistance is not as strong as it has been this past week. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.